All right. Hey, welcome traders. It is 10:30 on the West Coast, 1:30 p.m. on the East Coast of the U.S. and different times all over the world, depending on where you're calling in from. But welcome. Glad you could make it. Thanks for showing up. This is a FollowMeTrades.com live trading room. I'm Dean Jenkins, founder of FollowMeTrades.com, and we're here to see how the market reacts to the FOMC meeting announcement. See if the market is going to react, if any new information comes out, and look for trade setups as that happens. So again, welcome. Hey, before we get started, make sure you can locate the chat feature here on the Zoom webinar platform. And because I definitely want to hear your comments, any questions that you have as we go through this. We got plenty of time. We got half an hour until the announcement, and then we'll stick around and see if there's any trade setups and look at. I'll share a couple of my favorite trades right now. I'll take a look at any charts you're interested in as well. So we'll make good use of this time. So yeah, I found the chat. Excellent. So everybody, why don't you go ahead and type in where you're calling from? You know, what city, what state, what country. It's always fun to see, and it just make sure you can locate that chat feature. Here it comes. Ottawa, Canada, Philippines, Tulsa, Oklahoma, New Hampshire, Stockton, California, Madrid, Spain, no way, Chandler, Arizona. I've been to Chandler. I used to work for Intel, and they had a facility. They still have a facility. Dayton Beach. They're going too fast. I can't read them. Elgin, Maria's in Elgin, Illinois. Madison, Wisconsin. I was in the Navy. I was stationed in Waukegan. We used to head up to Madison once in a while. Port Orange, Florida. Woodstock, Ontario, Canada. London, awesome. Well, we got several folks from Europe. Very cool. Atlanta, Hawaii. Sandy from Hawaii. So it's 10:30 here. What is it? 8:30 in the morning in Hawaii. I think it's 2 hours difference. I wouldn't mind living in Hawaii, but trading from there and being there at the open is kind of brutal. Manhattan, Indiana. 7:30 in the morning. Yeah, so the market open is like the middle of the night in Hawaii. Yee. It's very expensive too. Yes, it is. Yes, it is. We got a friend who owns a condo, so whenever we stay there, we get to stay in a condo for free. That's kind of nice. I'm ready for another trip to Maui. All right. Well, thanks for typing in where you're at. We got lots of folks here and people still logging in, and we got plenty of time. Again, the announcement's coming in just under half an hour. But I want to walk through, we want to take a look at the overall market, and we'll do a quick poll here and see what you guys think is going to happen in just a minute. Australia, nice, Renee. Michelle from Quebec. Man, I'm surprised at the number of Canadians. I'm always surprised. A lot of Canadians tune into these things and follow the U.S. market. That's very cool. People all over the world. All right, well, Europe had a big day, didn't they? I know there's several folks from Europe. Big day in the markets there. We track that in my live trading room. We take a look here at a global markets map. And, you know, Japan, 1.86 today. Hong Kong, 1.23. And Germany, 1.83. I guess they're all expecting something from the Fed, maybe. I don't know what else is going on. All right. Michelle says, in Francois. I think that's something about speaking French, which I do not. Joe, that's a funny comment. If Yellen's truly a lame duck, I know there's rumors now that the president's going to replace Janet Yellen. She shouldn't take any action. Let the FMG do that. Yeah, I've seen enough Vietnam movies. I know what FMG stands for. The Fed new guy, right? Well, Andrea, they say that's their plan, but they always leave lots of headroom to change their mind on the fly. So Andrea is saying, didn't they already say no change until December? They leave lots of wiggle room to change their mind based on the realities on the ground. Right? All right. Well, hey, let's go ahead and I got a couple things to walk through here. Let's jump into it. So welcome to those folks just logging in. Boy, we got a full room. Glad you could join. Glad to have you here. Again, I'm Dean Jenkins, founder of FollowMeTrades.com. And a quick disclaimer: we're going to be looking at the live markets. I'm going to be offering my my analysis. We're going to look at some live trades, some that I like, some that I'm actually in. So just a quick disclaimer: everything here is for education information purposes only. I am a trader. I am not a financial advisor. I am not giving financial advice. So, again, I'm going to be looking at live trades, live markets, real money, and whether any individual places an order, makes a trade, an investment, that's solely each person's decision. Only you know what's appropriate for you, what your tolerance for risk is, your own circumstances. I don't know any of that. So I share what I do for education information purposes. Each person is responsible for what they do. That's fair, right? Michelle says we're high on pot in Canada. Okay. All righty. I heard that it's getting pretty close to being legalized in Canada. Here, I'm in Washington State. I'm just south of Seattle, and it is legal here. That's pretty interesting. It is still a shock, even after a couple of years, to drive down the road and see a marijuana shop and big signs advertising it, and the guy out with the sign, twirling the sign. It's just strange, but it's the reality. Hey, about me, if you don't know me, if you're new here, just real quick, again, I'm Dean Jenkins, and I founded FollowMeTrades.com. I've been investing and trading for about 20 years. I started that when I was working for Intel Corporation. They gave us incentive stock options and employee stock purchase. And, I started at Intel in '93, and it just went straight up, doubled and split every year. And I decided I was pretty good at the stock market and started investing in the .com stuff. I ended up getting some good lessons there. I did get an MBA from the University of Washington, and I was a fundamental trader for a long time. And I just found that to be so frustrating. You'd study a company and their financial statements and earnings would come out. It'd be a good report, and, you expect it to go up and it tanks, and the bad report would come out and it'd go up. And, ultimately the market is in the short term driven by emotion. It's a voting machine, which is what Benjamin Graham, who was the major influence on Warren Buffett, he said it's a voting machine in the short term. In the long term, it's an earnings weighing machine. But it's pretty frustrating to be a fundamental trader when a company should go up, when their stock should go up and it doesn't, and when it should go down and it doesn't. And what I learned was technical trading. And technical trading for me is the reality of what's going on in the market. Price action is the ultimate reality. Price and volume are the only realities in the market. That's what's actually happening. I totally gave up on the market for a while in 2007, but after the 2009 crash, when it started coming back up, I just couldn't stay out. And I got back in, got some winning trades. I bought Bank of America at $5 and a couple other things, and it went to 12. But it was still stressful because I didn't really have a trading method. But I got really interested in technical trading. About 2010, I made a ton of mistakes. I bought a ton of indicators, went down a ton of wrong paths, but ultimately landed on the system that I'm using now and turned the corner to becoming a very consistently profitable trader. And that's what I do for a living now. Again, 2015, 2 years ago, I launched my company, FollowMeTrades.com, and started sharing what I do and offering stock advisory, some courses, a live trading room. Hey, Linda, you're in Seattle. All right. Well, I'm in Olympia, just south of Seattle. People from Washington never heard Olympia, probably most people. But awesome, you're in Seattle. All right. Hopefully you bought your house a long time ago, because real estate in Seattle has been nuts. All right. Well, Andrea, great question. She's asking about whipsaw effect on the FOMC, first announced and it corrects, goes the opposite direction. I'm going to show you the setup that I look for, okay? So that's what we're going to do in this session. I'm going to review my trade the news setup that I use when there's big news like the FOMC coming out. You're a good straight person there, Andrea. So I'm going to review my trade setup. We're going to watch the market reaction to the FOMC announcement. We're going to see if we get a setup, look for any intraday trade setups, and I'll demonstrate that trade if we do. Now, just full disclosure, I do my trading in stocks and options. That's where I have my money. That's my funded account, stocks and options. I watch the futures markets for insight into the market direction. I don't day trade and I don't trade futures currently. I have in the past. but I've settled in on stocks and options on larger time frames. But if we see that setup on the intraday charts, I'll demonstrate it. I'll point it out. I'll kind of track that trade. I'll discuss some trade setups on larger time frames. I'm going to share a few of my favorite trades right now that we're in or ones we're looking at. And so you'll leave today with some actionable ideas. You want to be sure and stick around. That's toward the end. And I'll analyze any stock charts you're interested in. That'll be a little bit later after we see the market reaction to the Fed announcement. So let's take a look at the current market situation. Let's see what's going on here. So I've got futures charts here. I said again, I track these intraday for market direction and some insight. So I've got the S&P futures, the ES, the E-mini S&P 500 futures contract. I've got a 10-minute time frame here. But let's stand back and look at the 60-minute time frame. I like 60 minutes for what's going on in the near-term trend. Really this week or a handful of weeks, right? It's not long-term. It's not daily. But it's a good one for what's the trend right now, the bigger trend maybe that we're looking at. And the big trend, of course, the S&P and all the major indexes have been in a bull market since the recovery started in 2009. But there's a current leg up that the market is taking right now. It's even hard to get enough data on the screen on a 60-minute chart. This leg up started really back here in mid-August. So the current leg of the market, the current impulsive move of the market started in mid-August, and it is getting pretty long in the tooth, isn't it? It's been going on for some time now. Now, we expect this to correct before too much longer. This may not be the big correction, to the overall 9-year, 8-year bull market trend, but we could have a pretty decent pullback. And I even got to reset my Fibonacci retracement lines. This thing's been going on for so long. So from here to the current high. So when we get this retracement, if it starts from the current level, we expect it to come down to a Fibonacci retracement of 38.2 to 61.8, and that would translate to S&P 500 2619 to 2481. Now, there's no evidence this has started yet. My primary trading analysis that I do, the chart analysis, I use a very simple, repeatable version of Elliott wave, and we're currently in a wave 3 on a 60-minute chart, and I use Ichimoku cloud. So I like to see a trend change when it breaks down through the cloud. That helps confirm it, and then when we've got a retracement target zone, this confirms the trend change. This gives us a target zone. So those are really nice elements to have as we're analyzing the chart. So what is the trade setup that I look for when the news comes out? I'll go back to my slides here real quick. So when news comes out, quite often there's an emotional reaction in the market, right? So this is what the short setup looks like. Boom, there's an initial move after the news comes out. Then we see, and I track this on a very short intraday time frame. You can track it on like a 1 or 2 minute chart. I use range charts, and I'll show you my charts in just a minute. So after an initial move, we look for a retracement into a Fibonacci retracement zone of 38.2 to 61.8, and then we look for a reversal and new lows, a low, lower high, new low. So that's an entry point that says this initial move after retracing has a high probability of continuing. You can see there that it did. So this is what the exact same thing looks like on a long trade. Boom, here's the initial move. There's the retracement into a Fibonacci zone, and then there's the proof, high, higher low, new high. Off it goes to continue that original trend. So when we see this set up, there can be a really good trade. We don't always see it, and we don't. There's no trade setup, right? If it's not there, it's not there. But we're going to watch the reaction to the FOMC release, and we're going to see if there is this pattern and whether there's a trade setup there. And then we'll look again at some trades on higher time frames. Andrea, no Bollinger Bands or moving averages for me. No Bollinger Bands for sure, right? I do take a look at on higher time frames at like a key SMA like 200 for daily charts. A lot of people use those, and if people are reacting to those as support and resistance areas, I want to know that. But no, my primary analysis is based on Ichimoku Cloud and Elliott Wave with Dow theory thrown in, right? And so I try not to use too many indicators, and I just try to keep it simple and repeatable, right? And we're getting good success with the setups we're using. So very, very profitable track record over a number of years. And I'll show that in a bit. So what do you guys think is going to happen here? What do you think the FOMC is going to do? And Andrea, do I swing trend trade, day trade? I don't day trade, so I don't trade intraday time frames. Most of my trading is on daily charts. I'm in my trades 4 to 6 weeks on average. I do take some on 60-minute or 30-minute charts where I'm in them, from a handful of days to a couple of weeks. For example, we just traded oil. We just had a really nice oil trade. We got in it on the 24th. We got out of it today, so a week. Right? That's a short-term trade for me, is to be in it a week. Right? I don't trade intraday. I think the only thing that really makes sense intraday is futures, right? And it's really hard. Trading futures intraday is hard. Some people do it successfully. I just choose not to. I think you have to spend 6-7 hours a day in front of your computer and be waiting for setups. And I don't want to do that. Right? I want to spend an hour or two and then go do something else. I love trading. I love analyzing charts, but not that long. Right? So let's do a poll. Let's do a poll, an official poll here. I'm going to launch it. Now, hopefully you see that. Right? So I just launched it. You should have a pop-up with questions, and it's, what do you think will happen with the FOMC announcement? Oh, good, people are answering it, so it must work. We're going to get a surprise rate hike in this month, this announcement. We're going to get the expected rate hike reiterated for December. Big fizzle, nothing new, or I have no idea. So the answers are coming in. It's pretty cool to watch, and I'll be able to display that result here when. In a few minutes when the answers come in, slow down. Pretty fun to watch. I'll just give it a minute. All right, 60% of the people have voted so far. I'll give it another minute or two, see who else. And welcome to those who just showed up. Looks like more people are logging in. Boy, we got a lot of people here. Very cool. Andrea says she likes Zoom better than GoToWebinar or WebEx. Good. Yeah, I used GoToWebinar for a couple of years and finally got frustrated with it and switched to Zoom. And I like Zoom a lot. It's really a good platform. Thomas is asking, shouldn't we focus on the market reaction to the news as opposed to the news itself? Absolutely. Absolutely. So again, price and volume are the only realities in the market. So I'll rely on some of you guys to actually, I'm going to be watching the charts, and that's where my trade setups and my actions are based on, is what's going on the chart. But as the news comes out, the announcement, if some of you want to grab that and post it in the chat window, that'd be awesome. It's more of a curiosity to know what they say rather than actionable trading information. But it's fun to know, and we got half an hour, so. All right. So I think the voting is slowing down, so I'll go ahead and end it, and I will share the results. There we go. So hopefully you can see that polling results pop up. So 3% of the people think we're going to get a surprise here in November. 47% think we'll get expected rate hike in December that's been pre-announced. 32% will think it's going to be a big fizzle, nothing new, and 19% have no idea. Very good. All right, well, thanks. That's pretty interesting. And the other majority are saying, big fizzle or expected rate hike in December, no new news. Okay, boom, I'm going to stop that now. All right. Pick back up here. Here's something that I just want to cover before we get into it. And this is what I think, to be a consistently profitable trader, I think these three things, you got to have all three of these things. They're essential. If you're missing one, I don't think it's possible to be consistently profitable. First, you need great trade setups. And, you know, I have my setups. They work for me. They work for a lot of my customers, but they're not the only ones on the planet, right? But you do need high probability outcomes, and you need great reward to risk ratios in your trade setups. You got to have risk management. You got to control loss, because unfortunately some trades do lose. And you got to have a way to manage the trades, a method that takes emotion out. So it's a black and white, execute the playbook way of managing a trade for minimum risk, maximum profit. So no, absolutely. I don't think they are. That risk management, trade management, because risk management, it really is how much are you willing to lose on a given trade, and taking your position size based on your stop according to whatever rules you're using. I use the 2% rule and the risk of ruin tables to determine my position size. But trade management then is, once you're in the trade, where do you take profit? How do you trail your stop? How do you add to the position if that's appropriate? So once you're in the trade, how do you manage it? Really, risk management is determined before you take the trade. So those are my clarifications there. So I think they're different topics. All right, so let's take a look at the current market right now. So let's go back to a 10-minute chart. So the S&P is sitting here basically flatline to where it opened at the overnight session, right? It's up 2 points, or on the futures chart, 1.5 points. So it ran up earlier today. It's given it all back, sitting here basically at 0. So pretty much undecided. My chart format here, by the way, so on the right, these right two charts are the S&P 500 futures contract, the E-mini, right? 10-minute chart above. And I like 10 minutes for a intraday trend. You know, I would not take trades against a 10-minute chart intraday. The chart below is a 5-tick range chart. And I think that's a good setting. I like range charts because they take time out of the equation. So each bar is painted when price has moved, in this case 5 ticks. When it moves, you know, from the high to the low, more than 5 ticks, it paints a new bar. All right, did I vote? I think they're going to leave things the same. I think rate hike in December, no rate hike now, no real change. I think that's my expectation. But I don't care. I really care about how the market reacts to it, right? I care about interest rates and the U.S. economy and all that stuff. But in terms of trading, I don't really care what they say. I care how the market reacts. Okay, so S&P is currently, again, right at about break even, 1 point above the previous close. Gold is up about 0.5%. Now, I think gold is getting ready to start another bullish run. On the daily chart, it's pretty bullish. Now, on the 60-minute chart, it's going through a down sequence right now. Going through a down sequence, it's actually, according to a simple version of Elliott wave, very clear pattern here. This is wave 3. You know, a lot of people overcomplicate Elliott wave. There's no reason for that. You know, there's 244 permutations of all the classic stuff. I just look for a big impulsive move, right? Big move, that's wave 3. A correction to the big move, that's wave 4. When it goes into a Fibonacci retracement zone, it's validated as a wave 4, and then we start looking for the continuation, the next impulsive move, wave 5. And we expect it to go to a Fibonacci extension area. And this one may fall a little short, maybe getting ready, because I told you I used Dow theory. And look here on the 60-minute chart, we see evidence of a trend beginning to change before it got down into that extension area. And by evidence of a trend change, what I mean is we have, on the big picture here, high, a higher low, new high. Went above that high, did not go below that low, and we see price breaking up above the Ichimoku cloud. To me, that's evidence that this trend may be changing and heading up. So we'll watch that. So gold and the S&P certainly react to the FOMC announcement. So we'll keep this on the 10-minute chart. And again, for a high-resolution intraday look, I've got gold down here on a tick chart as well. That's on an 8-range tick chart. And we got oil over here on the left, 10-minute, and an 8-tick range chart over here. We just took a nice trade on oil. We took this based on a 60-minute chart. And if you're wondering if this whole, Elliott wave Fibonacci zone thing works, here's an example of it working. It doesn't work all the time. No method is foolproof. That's why we use risk control. But here was oil, big impulsive move up. That was wave 3. We saw it retrace. Right after an impulsive move, we looked for a retracement right into a Fibonacci retracement zone, these 2 blue lines, and then we saw evidence of it starting up. So we went ahead and took a long on oil. We actually took it on the 24th. We wanted to see this really proven because oil can be a little volatile, a little tricky, right? So we saw it go up, down, and when it started back up again on the 24th, we went long. We used USO, the oil ETF, and we had a target zone, a Fibonacci extension for wave 5, 61.8 to 100%. When we took this on the 24th back here, we said the price target zone was up in here. Well, today it hit it. And then we went ahead and trailed a real tight stop and got out of this trade this morning. So we got a nice little win in 7 calendar days on USO. So that was pretty good. That was fun. We did that in the trading room. We just closed that this morning. Okay, I don't want to lose track of time. 11:56 on 4 minutes. The FOMC announcement will be coming out. So let's pay attention to that. Again, if you weren't here earlier, I covered my trade setups that I'm looking for. And we're primarily going to be watching these range charts on ES and on gold for a reaction to the FOMC announcement. Okay, and just a quick review of what those are. So if it goes up, we're looking for an initial move, a retracement into a Fibonacci zone, and then evidence, high, higher, low, new high of a trend continuing on an uptrend, and the downtrend looks like this. There's the initial move, retracement, low, lower high, new low. There would be an entry point. So that's the pattern we're looking for, the setup, if we get it. So use TradeStation as well. You hate their alert system. I use it off a radar screen to alert when different price levels and stops and stuff hit, and I like it. Get a little pop up here. I got it configured to send a text alert to my phone, so that's pretty cool. Yeah, there are little quirks with TradeStation. Every platform's got its quirks for sure, but I know it. I like it. Michael, do I always only trade one pattern? That's a pattern for Trade the News. That's a unique pattern just for a quick news setup. I have 3 trade setups that I look for the rest of the time. Again, I'm not sure when you logged in, but I trade primarily daily charts, sometimes down to 60, 30 minutes. I have 3 setups, 3 trade setups I look for on those charts. So I try to keep it simple. I can remember and memorize 3 patterns. Market seems to be drifting. So we got about a minute and a half until the announcement comes out, and typically there's some kind of reaction. Michael says, what are my 3 trade setups? I want to catch an initial move into a new trend. I want to catch a correction to that trend, and then a continuation of the trend. In Elliott wave terms, it's a wave 3, 4, or 5. I'll trade any of them if they have the correct risk to reward ratio and enough profit potential in them. All right, let's see what happens here any minute. If someone's got a good news feed and they catch what the announcement is, that'd be awesome. Just go ahead and paste it in when it happens. I'm going to be watching the chart here for our setup. Look how the Russell is down right now, almost a full point, while the S&P is flat. NASDAQ is down a little bit. Dow is up a little bit. Yeah, I do host a daily live trading room, Andrea, Monday through Thursday. Okay, it is 2 o'clock on the East Coast. Let's see if the market has a reaction here. And Greg says unchanged. Thanks for getting the news there, Greg. This may be a big fizzle, but we show up, nothing happens. Okay, then you got to show up, right? If something does happen, you got to be there. Oh, thanks, Jack. Jack just posted a comment, public comment there. That the trading room is excellent. Well, thank you. You're excellent, Jack. You help make it a good forum. Wow, pretty much a non-reaction, huh? Some days these charts, blam, they go right off the screen. You got to rescale to even see it. Not so much today. Interesting that both gold and ES are inching up. They on the big picture, gold and indexes are inversely correlated, roughly, not perfectly, but in the short term they can sometimes move together. Andrea, would love details on the trading room, hours, the cost. Yeah, it's Monday through Thursday. We're in it an hour and a half, 6:15 to 7:45 Pacific, so that's 9:15 to 10:45 Eastern. Hour and a half, Monday through Thursday, and the details are on my website. I think I know my website address. There it is. There's the website, products, live trading room. So there's the details and way to sign up if you're interested in that. Website is followmetrades.com. Nadine, Andrea says, no idea how I got invited here, but I appreciate it. Well, I have no idea how you got here either, but fate, destiny. Yeah, this is a fizzle. This is a big fizzle. Gradual. So what they had said before was, yeah, one rate hike by the end of the year in December, and then probably a couple next year. So gradual, right? So whoever it was before said maybe, John, as Peggy Lee said, is that all there is? I don't know. I hope I didn't misquote something. I hope I didn't quote something offensive. I was just reading your comment. I think the market, Thomas's market expected a hike, now is confused, wondering what might be wrong. Well, that's why I like, trying to figure out what should happen, something as complex as the overall market. I mean, there are so many moving parts. Trying to figure out what should happen can make you a little crazy. So I just like trading according to what actually is happening. And what actually is happening is nothing. Nothing right now. We'll watch it for a few more minutes. Nadine says gold should like fewer rate hikes. I like how I do it too. We anthropomorphize the market, right? We give it human characteristics. Gold should like fewer rate hikes. Gail, you got your hand up there. If you got a question, type it in the chat box. I will be happy to do my best to answer it. Well, so nothing's happening here on the ES or on gold or on oil for that matter. There's no trade set up. There's nothing happening. But let's, so that's boring. Let's go look at some good trades, right? So I've said a few times, I am I trade stocks and options primarily. Here's some trades we're in the live trading room. Here's one that's really good right now. We're at about 12% profit on this one. This is CLR, Continental Resources. But guess what? You can still get in. And there's a couple things. So what's going on here with CLR? So this is on a daily chart. This is a stock, right? CLR, big impulsive wave 3. Nice. Wave 4, a perfect correction. Went a little deep. These blue lines are the Fibonacci retracement zone. Went a little deep, but as long as it stays above a 76.4, it's still valid. And then again, clear evidence of a new trend beginning. Clear evidence meaning higher high, higher low, higher high, higher low. Broke above the Ichimoku cloud. We got positive momentum here on the oscillator. And it just broke the 200 SMA. So, man, everything's good. So we got a price target on CLR above $55. The upper end of this range is at $71.58. I like this trade. There's still plenty of room to get in this. Current stop is this red line at 36.80. So there's a nice trade on CLR. You could get in it right now, 41.38. Stop 36.80. Target up here at 56.22 is the nominal target. Hey, John. Glad you could show up. All right. Yeah, that's no, that's not Art Radar. That's just the radar. This screen I showed here, it's an indicator I wrote to track open positions. What strike price and delta do I look for? Good question, Andrea. So, like on CLR, we're trading that with the, we've been in it a little while. We got in it September 19th, and we used the January 31 strike. So that's still a good one. We still got some time out till January, right? I pick a contract that we want to be out of that trade. We want it to be over well before the last 30 days where theta and price decay start to become a factor. So we want to be out of that thing in December, right? And we expect to based on the price movement. And then I like to go deep in the money with a high delta. And I look for the break point where, you know, you get the higher delta and it breaks pretty quick and price premium really hockey sticks up. So I like to be above at least like a 75 delta, ideally into the 80s. Because we're doing directional trades, right? These are swing trades. We're looking for a directional move, and the most profitable option play on a swing move like this is just to go long the calls, right? And we control risk by the position size. We just don't spend more on premium than we're willing to lose. So that's my quick, easy approach to options. Deep in the money, high delta, control risk through premium. Yeah, Gail, we were watching the S&P 500 futures contract. We were watching gold, which is GC. The S&P is ES, and crude oil, which is CL. If it hits the stop, if price touches the stop during the live session, so I don't act based on pre-market news, but during the live session, if price hits the stop by one tick, trade's closed, right? So it's a hard stop, absolutely. Will I hold CLR through earnings? What I'm going to do is take profit. So we're in 12% profit. So we'll take part of the position off, lock down some profit, lower risk, and then, yeah, we'll hold it through earnings. Absolutely. So that's a nice trade right there. CLR long. I like it. There's plenty of room left. Let me show you a short trade that we're in. We just got in yesterday. So this one's to the downside. And this is H&R Block. We're already in a little profit. This is a nice short trade. So here's the setup, right? Big impulsive move down. This thing cratered, right? From this started up here at about 37.50 or so. It tanked. down at under 20. So there's the big impulsive move. There's the correction. Here's our Fibonacci retracement zone, went a little above, but didn't get disqualified. Now here's the extension area, the wave 5 extension area is down here, down below 2060, down to 1366. And again, lower lows, lower highs, lower lows, lower highs, lower lows. Good Dow theory, good break under the Ichimoku cloud. So we've got, and it's also down under the 200 SMA. So we've got a stop sitting here at, I think it's 2665. It's this red line. I just mark my charts up with these lines. Yeah, 2665. Entry looks good right now, and the target is 2027. That's a conservative target. It's this whole range, but I use the upper end of that range for risk to reward calculations to be conservative. And you can see the distance from the entry to the stop right here versus the distance from the entry to the target. This is about a 2.5 or 3 to 1 reward to risk ratio trade. So this one looks nice. H&R block short, and we are trading that with the contract I'm using is April. So we're way out in April. They don't have a February or a March contract. We got January and then they got April. So we're trading the April $30 put, again, deep in the money, high delta play. H&R block, there's a short trade for you if you're looking for one. All right. Ideal ratio for risk to reward, high as possible. Absolutely as high as possible. I like it to be at least 2 to 1. Sometimes I'll take a lower reward to risk ratio if the probability of the trade is higher. So if the setup is just perfect, but it's got a low reward to risk ratio, I'll take it. Never, ever, ever less than 1.2, right? Because the math, the statistics for consistent profitable trading, you got to have your winners be bigger than your losers. And if you're taking trades that are 1-to-1, right, it's really hard to make the winners bigger than the losers, right? If you can make your winners on average twice the size of your losers, which is what we're doing, you only have to be a 50% winner to be a very profitable trader, right? Takes the pressure off. Now, we want to win more than half our trades, but if we shoot for those kind of statistics, then we're going to be very, very profitable if we can execute, if we can make that a reality that the winners are on average double the size of our losers. And that's what we're doing. All right. Well, let's peek back at the futures market. The gold's heading back down, but resuming its downtrend. ES really is doing nothing. Yeah, so it's a fizzle. The whole FOMC thing, it was a fizzle. But we didn't know that coming into it. It's worth showing up, right? Who was it? Andy Warhol said half the battle to success is just showing up. All right. Chris, these indicators at the bottom of my chart, this is a price oscillator, which I just use to confirm momentum, direction, and strength. It's called the OWL Optimum Wave Locator. It's an awesome tool from Trader's Coach. This is a precision trend filter, just a nice extra confirmation. If it's green, it's predicting more highs. If it's red, it predicts more lows. And you can see when it triggers red, it's pretty accurate. It doesn't give you a range or a target or anything. I like, when I'm building my trade setups and looking, I like to stack evidence, right? So I look for a wave count first. Here's an Elliott wave count. Big impulsive move, correction, wave 5 starting. Good. There's one piece of evidence, right? Dow theory, lower low, lower high, lower low, lower high. There's 2 evidence. It's broken underneath the Ichimoku cloud. There's 3. It's under the SMA. There's 4. The oscillator's negative. There's 5. The trend filter has been red, now it's yellow neutral. There's 6, right? So I just like to stack all that evidence up on my trade setups and try to increase my probability. That's what I'm doing here. So, hey, while we're here, you got any symbols you want me to look at? I said I'd do that for you. So I'm happy to take a handful of symbols and see if there's a case for them. Now, be forewarned that I typically have to look at 10 to 15 charts to find 1 or 2 that I actually like, right? The one, it doesn't mean, I've kind of explained my trade setup. So I'm looking for things that meet my trade setup because I know that works for me, right? There may be there's 1,000 other trading methods. So don't be offended if I don't like your trade. If I go, hey, there's no setup for me. I have to look at about 10 to 15 to find 1 to 2 good trades. So most of the ones you're going to ask, I'm probably not going to like, but we may get a few gems out of there, right? A few good ones. So let's start with Andrea. HD, Home Depot. We've looked at Home Depot quite a bit. So, you know, in today's market, this answer I'm going to give on Home Depot is going to be really the same answer for a lot of them, because why? We've been in a big uptrend for so long, right? So Home Depot is a beautiful trend, right? It's a beautiful trend. But I'm a swing trader. I try to catch new trends or corrections or continuations. I don't chase trends, right? So this is a wonderful trend, but for me, way too late to get in. And, you know, when's it going to end? That's hard to predict, right? It's hard to predict when it's going to end. There's no evidence of it ending. It's still putting in higher highs, higher lows, higher highs. So it's above the HMO cloud, it's above the SMA. It's a beautiful trend. It's just too late, right? Someday it's going to correct, then I'll be interested in it. RHT. Red Hat. Yeah, it's really the same answer, isn't it? It's really the same answer. DB, short for Dieter. Deutsche Bank. Maybe. Let's look at this. So here's the big downtrend, right? Remember I said after it corrects, then it gets interesting, right? Here's the big downtrend. There's the correction. Now there's some evidence that it's heading back down. This is interesting. Thanks, Dieter, for bringing this one up. So let's measure that correction real quick. It good enough, right? I missed my mark by a few ticks there. It made it into this Fibonacci retracement zone, didn't it? Very, very nice. What's the extension look like? Nice. So, has the downtrend begun? Yeah, looks like it. Looks like it. We've got lows, lower highs. We don't have new lows yet. We are under the SMA. We are under the Ichimoku cloud. Let's expand this. We can just see current price candlesticks a little bit. This is looking pretty good. So what I would like to see is a significant new low under here for this to be a go for me. If it were to do it from here, my stop would be above here, last high, and my target for this would be just inside this retracement zone. So we're looking at a target, you know, call it about $6, under 605, right? That's a nice reward to risk, right? Here's the risk, here's the reward. This is like a 6 or 7 to 1. So I would wait for it to hit 15.55, and if it does, I'd probably be taking this trade. I like it, right? If it never hits that entry trigger, I'll never take the trade, right? I want to see a new low. By then we'll have some momentum. And then, you know, say if it were to hit today, though, then I would go look for a, deep in the money, high delta put contract to trade that with. You can just short the shares if that's your style, but I like to just go buy a put contract, less capital on the line. You can control risk a little bit more. And look, I would be out in March or farther with a high delta deep in the money. So nice one, Dieter. I'm going to write that down, add that to my watch list. Good setup there for me, not ready yet. First Solar. Wow, look at that. So that pattern failed, right? We were looking at a retracement. It went well beyond. So I said they're disqualified when they go above 76.4. So that's disqualified as a correction to the downtrend. This is probably a new uptrend. And if it's a new uptrend, it's too late to get in, right? Now we got to wait for it to correct and do it and then take the next leg. So no trade on First Solar. FXE. Pretty remarkable that the first one we looked at I liked. Okay, FXE, currency share, Zero Trust, pretty interesting. So remember we looked at the first couple like Home Depot and RHT, right? And we said, hey, too late to get into the trend. We want to wait for them to correct. This is exactly what we're looking for, a correction like this. So here's the measurement on this one. And it's not in the correction zone yet, so when it gets down there, and it'll probably bounce off this 200 SMA, then we're looking for the next move up. So let this correction finish, and then look for the next move up on FXE. So you got to wait on that one, but it's an interesting pattern anyway. Microsoft, that's going to be the same thing as Home Depot knows. You know, what a great trend, big gap up, and don't be faked out. Right? See this gap from earnings? Here's a big gap. Right? Don't be faked out that the short's happening. Right? It's probably just going to fill this gap before it reverses and continues. That often happens. It is so bullish, right? Everything's green. It's above every indicator, right? So I would not try to short that on a daily chart. There may be a very short-term, couple-day short as it fills the gap, but don't try to short that. Don't believe that the correction's beginning yet. It's a long way from beginning. It's also too late to go long, so there's no trade. Too late to go long, too early to go short for me. When I am so far behind on, you guys are typing way faster than I can catch up. When, same, beautiful trend, lovely. Too late to get into it. What's the name of the red and the green line? This is Ichimoku Cloud, if that's what you're asking, the shaded area between the green. Ichimoku Cloud. I love it. It's a great indicator. MTSC. Now, there's a new one. I always love it when you bring symbols that I haven't heard of. Wow. That's a mess. Look how this thing swings and retraces 100%. That's not a tradable pattern for me. That is a chaotic chart. It is volatile. Please don't be offended. It's just not that great. JPM long. JPM is going to be just like almost all the big banks except like Wells Fargo, who's melting down. Big long uptrend. Too late to get long. Too early to go short. DB short. We did like that one. Blue. Is that JetBlue for Neil? Bluebird. Oh, hey, this is interesting. Up. So here's the big impulsive move down. Here's the move up. This retracement is too high, I guarantee you. It's going to be over 76.4. After you've looked at a few thousand charts, you can see it. Yeah, there it is. Too big. This is a new trend, and it's too late to get in. Wait for it to correct. FireEye. You saw in my thing we were long FireEye. Why are we long FireEye? It's a correction to this big move down. It broke out. You can see higher high, higher low, higher high, right? We got a target for this thing to retrace up into this zone up here above $26, and it still looks good. Yeah, it's pulled back a little bit, but so what? Price does not move in straight lines, right? It moves in higher highs, higher lows, higher highs, higher lows so far. Still above the cloud, still positive. We're staying with FireEye for sure. We scaled back because they're announcing earnings today after the close. So we did cut our risk back a little bit, but you say it's going down. I guess that depends on what time frame you're looking at. I say it's going up, right? Because it's making higher highs, higher lows, higher highs, higher lows. That's an uptrend. As long as it doesn't make new lows and reverse that and break under the cloud, it's still going up, right? If you're looking at a couple of days, that we got a year and a half worth of data here. It's up. Looking here. Yeah, I don't do currency futures. I'm not even sure I have the data for that. I'm sorry. SN. That's an interesting one. Sanchez Energy Group, huh? Yeah, not a good pattern here. Again, kind of like that other one, a little bit chaotic, big moves, 100% extent or retracements, so no, not happening for me. ON, Virginia. I'm never going to get to them all. I'm sorry. There it is. Kind of like all the rest of Microsoft and Home Depot and Bank of America. Beautiful uptrend. It's just too late. We missed it. Yeah, I absolutely run scans, Andrea. I've got several different scanning techniques that we use. We go through that in the trading room. I also, in my courses, I teach how to do that. But we go through quite a bit of it. and scanning for trades. Absolutely. I'll look at two more. BA is Boeing, right? BAC is Bank of America. Yeah, same. Well, you could take the name off and you couldn't tell the difference between BA and, well, Microsoft's got that big gap at Home Depot. I think Caterpillar. There's so many, right? Look at this. It's just too late. That's my personal trading method. How I approach it. Right. When I go to a trade, I want to know that I have a good risk to reward ratio. When there's a big extended mature trend, I don't know how much farther it's going, so I can't calculate the reward to risk ratio. So I go look for great ones that I can, like the ones I showed up front, like CLR and FireEye, right? I can calculate a reward to risk because I got a price target, right? A high probability zone of where it's going to. So that's how I do it there. Wow, we've been here an hour. That's hard to believe. Yeah, still absolutely nothing happening on S&P 500 futures, gold futures, or oil. It was a fizzle. That's all right. We still had fun, right? We looked at lots of trades. I gave you two great trades, CLR long, H&R block short, right? And we got a great watch list on Deutsche Bank that Dieter brought to us. That was really good. Okay, well, let me get back here, right? So we went through, and just to be clear what I said before, I think these are so important, right? Essential. You got to have great trade setups, whatever your method is. I've got a method that's working for me, high probability outcomes, great reward to risk ratio. You got to have good risk management, good trade management, right? I've looked at some great charts, looked at yours. Here's a question. Do you believe this? Do you believe you got to have all these three things? Great trade setups, great risk management, great trade setup to be a consistently profitable trader? Do you buy into that? Absolutely. Good. Good. Andrea says yes. Thomas, several other people. Yep. Yeah, I agree with that too, right? So let me ask you a question. Are you excited about some of the trades we just looked at? Like CLR, like HRB, like Deutsche Bank coming up. But do you feel maybe like this guy here? I've just provided a ton of information. I went really fast, right? We showed the trade parameters, but I've talked about my indicators, my trade method. You feel a little bit like this guy here. I like that, Robert. I've tried it without rules. It is hard, right? It is hard, right? Well, here, do you mind if I spend a few minutes and just talk about an offer that all the stuff we just talked about, right? I do run a PIC advisory service. I do run a live trading room. I run education. So I'd like to just take a few minutes and show you an offer. If you liked what you saw here and you're interested in it. Again, what I help provide in my advisory service is the great trade setups, right? High probability outcomes, great reward to risk ratio on the picks, risk management, trade management. I give you, step by step as we go through these trades, right? And what's that worth, right? So the winning picks on a $100,000 account, they're averaging about $1,900 a month. If we take the whole year, whole last couple of years, about $1,900 a month, normalized average per month, right? You get in my pick service, we do a weekly live chat where we look at the trades, answer questions, we go over trades, your trade ideas, just like that, right? If you were to pay for that, for 4 hours of consultation per month, that's like $1,200, right? One-on-one consultation, that's $1,000, right? Ongoing education as we teach through the picks, through the live chat sessions, right? That's what the courses cost. The total would be like $5,300 to get this, to go buy it individually. But I want to offer these to you. Again, great trade setups every week, right? Week after week after week, great trades that are getting great results. The results are on my website, by the way. And let me just show that. There's my website. Here's the results we're getting year on year, starting in 2013. Here's our year to date. We're up. We're looking like we're going to beat last year. And these are verified, right? I have a CPA firm come audit my results because I think that's super important. So I have a CPA firm come and you can see the audit reports. I just started this a couple quarters ago, right? There's the last quarter, here's this quarter, right? They come audit my results, because turns out there's a lot of people in this industry making a lot of claims that they can't back up. I don't want to be that guy. So let me get back to my presentation. So I'm going to offer you great trade setups that have that consistently profitable track record. Risk management on every trade, trade management is not going to cost you $5,300. It's $37 for the first month for a trial, because I'd like you to, have 30 days to see if it's a good fit for you. And there's 100% money back guarantee. I just want it to be a low risk for you. If you jump in, you take the trial, and you say, nah, it's just not a good fit, right? Because everybody's different. Everybody's different. So there's the link if you want to go check that out, right? Everybody has different belief systems about the market, what they're comfortable with, what they're not comfortable with. So $37, you can try my pick service for 30 days, 100% money back guarantee. If it's not your thing, you just send me an email, go, Dean, not my thing. No hard feelings, no hassle, no questions. I'll just send you a refund, right? After that, if you want to stick with it, after 30 days, you get a discount. It's $97 a month, as long as you have a current subscription. The list price on the website is $127, but you can get a 25% discount and continue after the 30 days for $37 at $97 a month. And you can cancel at any time. There's no commitment, right? It's month to month. You sign up, try for 30 days, another 30 days, whatever. If you decide to cancel, you just cancel and send me an email. There's a link there on the website to just cancel. It includes a free one-on-one phone consultation with me. So once you sign up, you'll get an invitation to put time on my calendar so we can meet and talk about it and answer any questions you have, get you off to a great start. There's a weekly live chat session Wednesday nights where we go over the picks, answer any questions you have, right? I got picks right now that have great entries, right? It is not day trading. It is swing trading or trend trading, kind of a mix of that on daily charts. In the trades, about 4 to 6 weeks on average. Okay, so they take a little time. It takes a little patience to let them play out. Do I have an annual, Sal? Yeah, if you're interested in an annual, go ahead and send me a note. It is Dean@FOMC Trades. And we'll hook you up with an annual. There's a pretty big discount for an annual. I don't have a link for that here. That's a great question, Sal. How many people are in the trading room? We have about, we got some trading room members here who are sitting in on the call, and they can chime in with their comments about the trading room if you like. I think we have about 150 who have subscribed to it. And on any given day, there's maybe half of those people there. So it's not, it's not too packed. You can get your questions answered there. So again, there's some existing members, I think, who are here on the call, and they can just type in their experience with the trading room. And yeah, there's Pedrick. You can see his comment, Andrea. Pedrick has been there from the beginning. Yeah, John, your comment is just to me. You didn't make it a public comment. But John said it's very good. There you go, John. Cool. All right. There's some nice comments coming in. You guys are awesome. Wow, Karen. You humble me. All right. Very cool. If you take this picks offer, on the back end of that, there's going to be another offer for the trading room. So if you want to check that out, really, really nice discount and a really nice offer. So if you're interested in the trading room, take this trial right here, and you'll get another offer on top of that. Really good deal on the trading room. We don't day trade futures. Pardon, Kamar, I hope I got your name right. We do not day trade futures. We're trading stock and options on longer time frames. You are welcome. Thank you, Lolita, says I offer a lot of value. All right. Well, hey, Any other questions you guys have? I am here at your disposal. Let's pretty much covered what I wanted to cover. Made that offer there if you're interested in that. And other than that, just let me know if you have any other any other questions I can answer. Chart settings part of special offer. In the trading room, if you have questions about how to set your charts up to be similar to mine, I just answer that in the trading room. Yeah, I think 31 still good, Gary. 31 still good for CLR. Well, that's I was thinking HRB. Let's go look. Let's go look at CLR. So if I were to go in now into CLR, what would I do? And I want to go here, single. Okay. If I'm getting in now, boy, the next one out is March. January's got 79 days left. If we're going to be in the trade 60 days, that gives us 19. Yeah, it's too close. So I would go to the March. I would just go to the March contract if I were entering now, right? Because the ones who took the trade back in September with me, we had more time and we're starting to already scale out a little bit. And so we're doing a call. Look at the open interest on this. Yeah, I like this 35. So the 35 call would be the one. There you go. March 35 strike price call. How long did it take me to be consistently profitable? As a technical trader, I'd say it took me about 2 years. It took me about 2 years of trying, buying every indicator and, going down a lot of wrong paths. Having a mentor was the thing that made it, that turned the corner. Having the right mentor who focused on risk control and on discipline and on psychology, in addition to great trade setups and technical analysis. And that was Bennett McDowell. He's the founder of Traders Coach. So I hooked up with him. He was my mentor, and it took a couple of years to really get it down. Do I use the trade size calculator? I do. I use the math behind the trade size calculator. I actually ended up building my own version of it here in Excel. And this helps with position sizing because this constrains it to I only want 15% of my account tied up in any given. So I use the formulas, but also added some features here. So anybody that signs up, I give them a copy of this if they want it. URL for the trial is here. I'll post it again. I'll post it in the chat area. Can you see that okay? Okay, great. Reading here, any other questions coming in? Andrea, that option is expensive going so far out. Well, I got a whole riff. Andrea, on that. So it's the current bid is $780, so $780 on it, right? So my approach to risk management on options is to only spend on premium what I'm willing to lose in the trade, which would be 2%. So in a $100,000 account, we would buy three. We can round up, right? 3 of these. If we can get them for $800, it'll be $2,400 in the trade because we're not letting it go to zero. We're not going to lose $2,000, right? We're going to be out of it long before it goes to zero. So we put $2,400 on the table, right, for that trade. So I could, here it's got a delta of 79. I can certainly go find a cheaper contract and go find them for $100, right, out of the money. But the delta's so low, if I go spend that same $2,400 and this thing goes my way, this one's not going to increase in price very much, whereas the high delta one, right, it's going to double or triple in price. So that's the thinking. The rationale is, I'm going to put a fixed amount into the trade. I don't really care what the individual contract cost is, right? Whether I buy 10 contracts or one, what I care about is how much it's going to appreciate if the trade goes my way. That's the key. I had a whole webinar on that. It's called why cheap options can be very expensive. Yeah, but remember, these trades are on daily charts, and they're going to take, on average, 4 to 6 weeks to play out. So if we're in it 6 weeks, right? What we don't want, what if it keeps going? That's why I like to leave room. What if it keeps going? If the trend continues past my target, I want to stay with it for as long as it's going to run. I don't want to be forced out because now we got time decay and theta, and we're losing value on the contract. So I want to have plenty of runway. I want to have plenty of time on my contract so I can stay in the trend and get the most profit out of it. We end up paying a little more up front, but that's really irrelevant because, again, do I buy one contract or 100 contracts or 10 contracts? I don't care. I'm going to put about $2,000 out of a $100,000 account into the trade. And what I really care about is how much is that going to appreciate if price goes my way, right? And so the deep in the money, having plenty of time, high delta contract will appreciate dramatically and will make profit. That's the end game. If it's too short, then we can get forced out of the trade or get caught in price decay due to the last 30 days of a contract. The time value portion of that kicks off pretty significantly. We don't want to have that. We don't want to be in profit and then just because of the contract we chose start to lose some of that profit just due to time decay. We don't want that. That's my opinion. All right, hey, the questions are tapering off. So again, 30-day trial, $37, 100% money back guarantee. If you're interested, I will put the link up one more time. And other than that, boy, thank you for showing up. I sure appreciate you spending time. We covered some good trades. I enjoyed this, even if the FOMC was a fizzle. I got to look at some of your charts and interact and have your questions. I enjoyed it a lot. All right. Well, hey, looks like it's slowing down. Everybody's saying thank you. People are logging out. So I think we are done. I'm going to go ahead and wrap it up. Well, hey, have a great rest of your day, rest of your week. Be careful. They are out to get you, right? Just because you're paranoid doesn't mean they're not out to get you. Use risk control and have fun. All right. Thank you very much. Catch you next time. Bye-bye.